something weird just happened. Now, the Fed didn't really change anything, Bitcoin didn't really crash, and yet the entire market shifted tone in a matter of minutes. If you only looked at price, you'd miss it. But underneath the surface, liquidity, oil, and macro pressure are starting to line up in a way that could decide the next big move in crypto. Now, let me show you exactly what changed in these last 24 hours and why it actually matters. And now let's kick things off with Bitcoin, because this is what tells the story the best. Now going into the FOMC, price was pushing up. Clean structure, higher lows, moving straight into that 78k resistance zone. Now everything looked bullish until it didn't. Now right after the Fed announcement, we got an immediate rejection. Not a crash, but a very clear shift. Momentum slowed, buyers stepped back in, and the price slips under short-term support. Now this is that run-up that we had before the FOMC event, which was at 2 p.m. And that obviously was this candle here. Now this is actually where smart money starts taking profits. Not because the trend is over, but because the catalyst is gone. And now the key detail that most people missed was that there was no panic, no aggressive sell-off, just hesitation. And now what that usually means is one thing: the market is waiting for something bigger. Now let's talk about the actual trigger. Now the Fed. On paper, nothing surprising happened. The Federal Reserve held rates steady again. Now that is actually what everyone expected. So why did the markets actually react? Because in this environment, it's not about what they do, it's about how they signal. And the message was very clear. Inflation is still a problem, they're not ready to cut rates, and uncertainty is still elevated. Now, in other words, liquidity is not coming anytime soon. And when rates stay high, money stays tight. And when money stays tight, risk assets struggle to keep that momentum. And that is why we saw crypto dip, stocks hesitate, and overall sentiment shift slightly bearish. Now here's something very interesting. This exact pattern. Market is dropping after the FOMC. It has happened over and over again. So this obviously wasn't random, and it was positioning unwinding. Now the silent driver for today is oil. Now this is actually where things get a little bit more interesting, because the real pressure is not obviously just from the Fed. It's coming from oil. Now oil prices have been pushing higher and higher again, mainly due to this geopolitical tension. And that obviously creates a chain reaction. So we've got higher oil, higher cost, and slower inflation decline. And now this situation actually puts the Fed in a corner, because if inflation doesn't come down, they can't cut rates, even if they want to. So even if crypto wants to go up, macro is basically putting a ceiling on it. And that is why the market does feel stuck right now. It's not a lack of demand, it's lacking permission from the macro. And now what is the market actually doing? And now here's a part that most people are actually missing. So Bitcoin is still relatively strong, but participation isn't. Now volume is low, but retail is quiet, and most of the buying is coming from institutions. So what does that actually create? Well, this creates a controlled market. Not euphoric, not collapsing, just slowly moving with low conviction. So this is not a full bull market environment. This is accumulation with hesitation. And in markets like this, moves can reverse quickly because there's not enough depth behind them. So now here's where things actually stand right now. We've got three forces controlling the market: the Federal Reserve keeping liquidity tight, rising oil prices keeping inflation sticky, and Bitcoin stuck between strong structure and weak participation. And that combination obviously leads to one thing: a choppy, reactive market. Not trending cleanly, not breaking down either, just waiting. So key levels to currently watch for resistance would be 78 to 80k, and for the support, we'd be looking at 74 to 75k. Now, if we break above resistance with strong volume, that's your continuation. If we lose support, then this turns into a deeper pullback. Until then, this is a trader's market, not a hype market. So right now, crypto isn't leading, it's reacting, and until macro loosens, Bitcoin isn't deciding the direction, the Fed is. So that is the current market situation right now. It's not the best, but obviously I will keep you guys updated in the upcoming days if things do start leaning towards a more positive side. Now, make sure you check out the description below where you will find Evedex, which is the decentralized platform I also use for all of my trading. So if you're looking to trade or even trade alongside, then feel free to check that description box down below. Now make sure you subscribe to stay up to speed with all the latest videos. Drop a like, will be greatly appreciated, and thank you for watching, and I'll see you all in the next video.